Hey there, Dear Tech fam, and welcome to another episode of the Dear Tech podcast. Today's episode, I sat down with Alexander Harmsen, the founder and CEO of PortfolioPilot. PortfolioPilot is a personal AI financial advisor. It's been used by over 30,000 individuals and over 30 billion in assets tracked. And in 2024, they saved over $11 million for their users via continuous tax loss harvesting. If you don't know what that is, you definitely need to listen to this episode because I think tax loss harvesting in general is very nuanced and it's something that isn't utilized by most people. But continuous tax loss harvesting kind of changes the game. So definitely a very interesting part of PortfolioPilot, but they do a lot more. So in this episode, we also got into, the fact that people honestly make emotional decisions and not rational ones especially when it comes to investments. And this tool, the AI, offers a dispassionate and objective financial guidance, right? A very not just looking at the data, which other apps do, where you just look at the data and see what it is and then make your own decision. Here, it gives you options and it tells you why these are better or these are good options, and it's very objective, right? So I thought it was very interesting, and it's a very psychology first approach in the design. So I thought it was all really cool. But honestly, the tool's great, but Alex's background is extremely interesting. So before this company, he was the founder and CEO of Iris Automation, which was acquired. Iris Automation is like an autonomous drone company, and it was very interesting to hear about what he went through to get that off the ground. And he was also, an early contributor to NASA's Mars helicopter, Y Combinator alum, raised over 30 million in venture capital, named Forbes 30 under 30. He's done a lot and he's had a lot of experience, and it was very interesting to hear about how it all tied together throughout his journey. And we had a lot of fun going through it. And we even went to talking about how personalization is probably one of the most underrated things about AI, trends in AI. And it was a lot of fun, right? But on top of that, Alex was very gracious and very nice to us. So the listeners of today's episode, if you use the promo code podcast, PODCAST, on portfolio.pilot.com, you can get a free month of the gold plan. And I would encourage you to go check it out, see the tool, see how it works and how much you can save and how useful it can be for you. So thank you, Alex, for giving us that opportunity. And if you want to connect with Alex, you can go on LinkedIn, check out the website, but also on X, it's at Alex Harm. I'm gonna have all that in the show notes. But yeah, I hope you guys enjoy this episode as much as I did. It was a lot of fun to shoot, and let's get to it. Well, Alex, welcome to the show.
It's great to be here. Thanks for having me on.
Of course. All right. So I as I was going through everything you've accomplished, it's a lot. So I want to start with, when I look at things, I see Mars, I see drones, I see money. How do you choose what to build? Why do you choose what's next? Because it is a varying amount of things.
I was thinking about this a little bit recently. There's something about life purpose and thinking about what is my focus? It feels like most, experts say you got to narrow down and do something really well. And it kind of feels to me like I've been, at any point in my life, a lot of it has been about learning, trying to make some sort of larger impact. I think what I'm doing should be unique in some way and value additive. I really like the Peter Thiel mentality of competition is for losers. And if everyone's doing the same thing and you just do it slightly better with slightly better marketing or a slight edge, it's not that exciting. I want to do completely new things. And oftentimes that ends up being something in a regulated industry. I'm a big believer that most of the big businesses, from now on are probably going to be regulated in some way or behind some barrier that, other people are maybe afraid to cross or don't know how to cross it, or it just takes a significant amount of upfront capital, commitment, time. If I go, all the way back, I worked on NASA helicopter, it was super early on, right? A little drone landed on the Martian surface, I think in 2021, 2022. And I was working at NASA in 2014, I think, on super early cutting edge computer vision models, AI before we called it AI, deep learning before we called it deep learning. AlexNet and neural nets for computer vision, things like that. And it was really exciting. I loved aviation. I had my pilot license. I was working on robotics, my background in school was engineering, physics, and economics, and so it was like modeling everything, complex systems, trying to turn them into something interesting. And I worked for a little company called Matternet because I saw a TED talk, and I pestered the CEO, I don't know, 18 times before he eventually relented and created a position for me. They were like a 3-person, little startup with limited funding, but they were, this was 2013, I think, something like this. And, this CEO had a vision of, billions of drones doing package delivery, and, where we had sort of developing countries leapfrog, wire in ground, telecommunications infrastructure. They basically went from no communications to cell phone communications. We could potentially leapfrog roads as well. And so the idea that, there's currently 1 billion people without full, year-round access to roads. Maybe the solution is not to build roads everywhere. It's very expensive to do that. Maybe instead you could just have drones doing package delivery and vaccines and blood and packages and whatever else. And then I don't know, I think 2 weeks after like starting to work there, Jeff Bezos said drone package is the future, right? By 2020, we're going to have 1 million deliveries a day with drones, or whatever the big proclamation was.
Yeah.
Obviously, regulations have slowed that vision down a little bit, but even just working there for a year, it became very clear that if you sort of extrapolate this vision, if you think about millions of drones interacting in our national airspace, there's a few core technologies and different problems that you need to solve before you can have that future. And so maybe my own vanity, maybe overconfidence and arrogance, maybe just pure naivety, I thought, okay, someone has to solve this collision avoidance problem between everything else. We're not going to do it as a drone package delivery company. There's mining exploration and pipeline inspection and farm and agricultural surveys and cargo delivery and weather, and I mean there's so many commercial use cases beyond just package delivery. It's a massive industry. It's so nascent. I might actually be one of the experts here with sort of like the NASA computer vision experience, a limited experience, and so this drone startup. Why not me? And created Iris Automation, my previous company, around purely just this very specific problem that I thought I was uniquely qualified to solve. And 7 years later, we had regulatory approvals in 9 countries and 3 offices and lobbyists on staff and an entire flight team. And we bought an aircraft to do mid-air collisions to collect testing data. And we had built massive simulated environments. And I had a team of PhDs in computer vision working with me. And I was learning something new, every 6 months, and a board and massive investors. And we raised about 30 million. And eventually, we had such a head start that we sort of got this offer from a private equity firm backing a big partner of ours, to basically just consolidate this like massive lead and regulatory capture. And in 2021, I sort of found myself, trying to figure out, okay, what's next, and I don't like. This is all answering your question, like, how do I decide what to work on, right? I don't know what's the theme throughout, all of these stories. Something interesting, something like I like to think like when I'm in something, I'm extremely focused on it until the job is done or until I sort of like stop adding real value. And then in 2021, at that point I was married. We decided to start having kids. Now we 4 years later, we have a 4-year-old and a 2-year-old, two boys, super cute. And we bought a house in the Bay Area. And I took out my coding gloves for the first time in a little while. Being CEO of some tech startup that's growing fast, they, at a certain point, your engineering team has the conversation with you. And so like, Alex, like you just can't contribute code anymore. Like you're doing more harm than good at this point. And so, I started prototyping and coding again and, messing with sort of like new AI machine learning models, built, I don't know, 40 different companies, on the back of a napkin and talking to users and trying to figure out what to do next. And, I sort of at the same time, it was the first time that we had any sort of liquidity. And so I started talking to financial advisors and wealth managers, mostly just like, let's get an expert involved, right? Like, I presume they know something about investing and sort of wealth management and diversification, something that I don't know. And it kind of felt like every single one of the people that I was talking to, they were more salespeople than financial experts. And, they definitely wanted to manage my money, but it didn't feel like they were going to set up some personal plan and invest it according to the way that, was most optimal for me. And my wife runs a big startup company as well. And, biopharma, AI model of the human body for drug development, super cool as well. Also like a highly regulated space, where you need to, think about complex bounding functions and how do we do sort of the right mix of hybrid AI and mechanistic models. So considering our startup equity, we have 401ks and 529s and IRAs and a Roth IRA and, some startup investments and angel investments. My wife's, equity in the company, a pile of cash, some a crypto wallet, a cold storage crypto wallet, a Coinbase account. Like, how do I even start thinking about optimizing this? And if I search online, there's 1,001 consumer fintech tools that are supposed to help. But I also found that there's robo advisors, but they only focus on this like fairly niche thing, right? Like they'll give you some exposure to markets and basically just put you in some standard equity bond ETFs. Kind of felt like a lowest common denominator solution, better than the wealth managers and financial advisors, but only marginally. Yeah. It wasn't really sort of this like, financial optimization across everything. And then there's so many trading tools, options, chains, and contracts, and Wall Street bets, and Motley Fool, and one website says Nvidia is a clear buy today. Look at this news, and the next one says you got to sell it all. The market's going to crash next week, and I don't want to become a trader. I mean, there's absolutely many, many people that love it, that think they have an edge, that there's a thriving industry and tools aplenty, Bloomberg terminal lights, for the retail investor. But I wanted something that was a little bit more passive, not completely passive, hands off, give it to someone else, not super active. I need to be in it every single day. It felt to me like the perfect answer was a tool that plugs into my life, my financial life, connects all my different accounts, looks at all my different assets, analyzes how diverse I am, how efficient my portfolio is, thinks about the risk that I'm comfortable with, models out long-term, am I set up for retirement, short-term liquidity needs, are they taken care of, are there tax optimization opportunities? Yeah, I don't know, it's the early 2020s, we're 5 years away from AGI. This should be possible right now. There's something like $10 billion of heavy fintech infrastructure investment that's happened. And basically over the course of a couple months, I built this thing that I was envisioning for myself. And then, the more and more I talked to other people about it, the more it felt like, okay, you know, I don't think we're quite ready as a society for AI to manage our money for us. But the idea that you could have AI optimize your finances for you feels feels right. You know, the idea that you could it can scan everything, dig into its library of sort of known, optimization techniques, and then suggest, give you a menu of different options on how you could optimize your life. Does 98% of the work for you. You trust it because at the end of the day, you get to decide, apply, no, reject, ignore that. That doesn't make sense. Give some feedback to the model. The idea that it could iteratively learn from you, that it can proactively scan every day, every minute, every month. How often do you want to make changes? You could set it up, and it hasn't viewed to markets and is thinking about diversification, new opportunities and asset classes, and you get to decide how eccentric you want the recommendations to be. Boring fidelity index funds, or triple leveraged Nvidia, blah blah blah. And I feel like that's the promise of AI, right? That's basically now what we've built with PortfolioPilot. And yeah, I think the picture is just becoming clearer and clearer every single day. It feels obvious that 5 years from now, maybe even 3 years from now, depending on who you listen to, all of us are going to have a little team of AI agents around us, your personal fitness instructor, your dietitian, your medical assistant, your legal advisor, your financial advisor.
I think a lot of people are trying to do that already with ChatGPT, just asking questions. Like I know I have friends of mine for the gym, at least. No one makes their own workouts anymore. It's like, all right, I'm here. I'm at Planet Fitness. What do I do? Right, stuff like that. I do want to. So I want to get into. I do think that we're always told that like you're supposed to be dispassionate about your stock picking, right? But it's impossible. If the market drops 50% and hasn't, I mean, knock on wood, let's hope not, but if it drops 50%, you're not buying, even though you should be. We all know it, right? Market drops, you buy more, but if your net worth just halved, you're not going to want to buy. So it's always good to have that dispassionate AI tool.
Am I going to
So
lose my
wait.
job? There's a fear and greed in everything here, right? I've spoken to probably 1,000 users, clients, people managing their own money, self-directed investors, individuals from across the country. No one is doing it by the book, right? Not me. Like, well, what if I wait one more day? I'm like,
Exactly.
I'm pretty convinced that this is the right move. But there's a psychology in everything here, and this is absolutely fascinating on the consumer side, right? With my previous company, with Iris Automation, there's still humans involved in the decision making process, but it felt pretty clear cut, right? If you want to fly beyond line of sight, more than a mile away from an operator, then you need a collision avoidance system. You need that as part of the regulatory safety case. You can run the numbers. This lets us run 5 times more efficiently. We can triple revenue. It costs $40,000 for this safety system. Yes, let's do it. Right? It's like it feels like
Easy
it's
sell.
numbers. There's a couple people involved. The CFO gives the sign off, and let's go and do it. But we've just throwing out one example. Right? 2 years ago, there was one guy who had 40% of his portfolio in Tesla, 40% real estate, and then sort of 20% in like a bunch of random other stuff in a retirement account. And the system told him, look, you should sell like 80% of your Tesla stock, right? Just objectively, this feels like the right decision. And he hit ignore, right? With me on a call, in a beta test, before we'd really gone live. And I said, yo, like, why are you ignoring this? This feels like it feels so obvious. The number one rule, don't have more than 5% in an individual position, or whatever the sort of something like that, right? Holdings
Yeah.
concentration. There's so many diversification risks associated with that. And he said, well, if I sell it, I got to pay a whole bunch of tax. And so, like, the fact that your system isn't taking into account the taxes, it doesn't make sense for me. Right.
Mm.
And so, okay, so we went away, spent 2 months, built a whole tax calculator, cost basis tracking, pulling in transactions. We came back to him and said, okay, sell 60% of your position. This is how much you have to pay in taxes. This is going to be worth it. 2 years from now, like, you'll be in a sort of net positive possession. No, ignore. That doesn't make sense. And we said, okay, tell us again, what's going on here? He said, well, if I sell it, then, I know how much it's at, but I'm not going to just sit on cash.
Mm-hmm.
I'm not going to go risk off. I'm 28 years old. I'm a software engineer in the Bay Area. And, let me go extreme. I didn't start with 40% of Tesla. It's just Tesla did really well over the last 10 years. And
Yeah.
I just kept watching it grow. And if I go to cash, then probably I need to do, like, 40 hours of research and a bunch of other stocks. And I'm going to end up investing in Google or Meta or Microsoft because that's what I understand. And I'm going to end up with, super correlated exposure anyway. And so I'm paying all this taxes, spending all this time for no real change in my portfolio. And so we went back to the drawing board. I was like, okay, what is this guy missing, right? Like, what is the thing? And we did all these iterations, and it ended up that his uncle worked at Tesla, and he felt like he had some insider information. And, like, there's sort of all these, like, psychological pieces. He's just, even 30% on a single day feels problematic. Even if I'm going to sell, I probably want to spread it out a little bit. There's, like, it feels like you don't want to be rash. Everyone's telling you don't just sell everything. The market is down today. It's up tomorrow. Tesla in particular is very volatile. And, at the end of the day, after probably 6 or 7 iterations, a year of building out this platform and considering all these different edge cases and thinking through the psychology, what he ended up actually acting on was something like, and I don't remember the exact thing. And, of course, I'm not allowed to give actual financial advice,
Sure.
right? So, thinking about this as, like, hypothetical example, we told him to sell something like 5% of his Tesla position, told him exactly how much he needed to pay in taxes, and then suggested, like, a commodities index ETF that tracked, oil and, soybeans futures, a bunch of other commodities, extremely uncorrelated to the real estate and the, this heavy tech exposure that he had. Also high expected returns. Inflation at this point, sort of middle of 2022, is like an extremely, common narrative. Tesla stock was down quite a bit. And he was, like, more worried about diversification than ever before. He said, okay, 5% doesn't feel like a crazy amount. It buys this diversification. We can show him sort of the score and what this, does to his downside protection. Let him run a couple different simulations, back tests. He said, okay, finally, this is the kind of trade, like, that actually makes sense to me, right? And how many layers of psychology are wrapped into that? How many sort of extra things do you need to consider to give one person one piece of, like, really good financial advice? And whether it's actually good financial advice or not, is, like, it can be quite subjective. And so part of it is trust building. Part of it is, like, a big compliance program. Part of it is, getting people to trust that, you keep their accounts secure and their information secure. that it's built in the right way, that you can, you don't want to overwhelm people in all the information and analysis. You want to show them enough, for a lot of people, it's sort of one or two layers down, right? You don't need to go 7 layers down to all the assumptions that go into it. But I think at least like a 1 or 2 layer and deeper analysis allows people to say, okay, yes, that makes sense. Clearly, this system is considering all these different things that either I'm not considering right now, or I would be considering if I had a week or two to sort this out. And then there's this iterative approach that seems to work really well, in that I think a lot of people come to us not with they come to us with some situation that they're in, right? And I think for a lot of people, they are much more comfortable admitting it's mostly good, but there's room for optimization. There's very few people come to us and say, my portfolio's fucked. You need to, go in and just unfuck the whole thing. Yeah. No one says that, And so, you want to meet people where they are, and then, nudge them in a slightly better direction. Maybe it takes a year, 2 years to sort of get back on the right path. For some people, they don't want to sell anything. Selling almost feels like you're admitting defeat. And, for most of our users, they're, in an asset accumulation phase in their life, right? They're getting a paycheck every 2 weeks. And so one of the most popular tools is, we call it the next $1,000, where to invest your next $1,000. And so, we understand markets and the portfolio management, your goals, your preferences, what your current, net worth and investment. And then if you add another $1,000 to it, theoretically, we could put that into, the place that is going to improve your overall portfolio score and retirement readiness the most, without having to sell anything. And I think that actually feels very helpful, feels like the right sort of guide to just every 2 weeks, I get a little bit better. My score goes up a little bit, 1 point, 2 points. And then, over time, I'm just getting better and better and better. I think it feels very similar to building up a credit score, right? Building up credit history. I think it's like a very familiar concept to people. I got to save for, X, or, save over a couple of years for a down payment on my house.
You're almost gamifying financial planning, because it's like, okay, where can I put my next $1,000? Almost gamifying it.
It's something useful. Well, I like the thing that you said before about the fact that you sort of want users to be dispassionate. When I think when I hear gamification, I immediately think of Robinhood and confetti in the air, and push the button trade,
that's
tell
too
all your
much
friends and we'll give you free stock. That feels like gamification. There's an element of gamification, right? Just like, okay, I need to sort of stay the course, improve my score as we go. I think it feels a little bit more like having a map, I think. Right? I think it's useful for people to have guardrails, especially over the last couple of years. Like, I think a lot of people realize that they're not quite as good of a trader as they thought they were.
Well, because COVID made everyone think they were geniuses, right? Like, me and my friends were having a conversation. I think this was in 22 or maybe early 23. And we all were like, are we just the best at this? Because I really was like, I'm amazing. But I think that's the circumstance. And until you have a situation like we're having now, you don't realize that, no, you were just in a golden age of stocks.
Right, exactly.
Yeah, but no, and I think what you said earlier about people not coming in saying like my portfolio is fucked. I think people, usually, at least from my conception of what I'm thinking of, these people are like, if someone's portfolio is fucked, I feel like they're less likely to go out to a planner because they're like, I need to make this look pretty. It's like when you have a dirty, someone come to clean your house,
Right.
you start tidying up. You're like, I don't want them to think I'm as messy as I am. It's the same idea, right? People that have like okay positions or okay portfolio, they're like, all right, I know that I'm not doing what I'm supposed to do. I know I'm 40% in one stock. We've all, not we've all, but many people have done that before, right? So I can see those people, but people that have their portfolio fucked, they want to clean it up. They want to clean up their house. But I feel like, okay, I want to make one statement. I feel like your app is more of a psychology app than a financial app at this point, right? You're over here massaging people's brains of how they can let go of these stocks that they're exposed to.
I was. I think you're right. Absolutely. And one thing I love about my job is that like I get to I get to do like the most fun parts of whatever we're doing as a company, right?
Mm.
Like typically, if something is stuck in the company, then I sort of like spend a lot more time there, sort of surge resources to like whatever the current bottleneck is. And it could be marketing, or it could be something in the product, or tech piece that's bottlenecked right now. Uh, and it sort of feels like a lot of what I've learned and focused on is either on the marketing side or the product side is this psychology with the previous company, with the B2B company, with Iris. I shook the hands of every single customer we eventually sold to, like a year before we ever sold to them, looked them in the eye, got a drink with them at a conference, right? It's like B2B sales in person, lots of flying around. Uh, and here there's thousands of people every month, that I've never met before, that are deciding to pull out their credit card and pay money to this service, this AI financial advisor that we've built. And so it feels like it needs to be truly autonomous, the experience, right?
Mm-hmm.
Every part of that, the trust building, the friction, resolving dead ends, so many different places it can go wrong, and at every point there's some sort of psychological, people are either psyched using the product or not,
Mm-hmm.
and you need to keep increasing that psych factor. You were asking something of them, especially for them to pull out a credit card or connect an account or hand over some personal information. There like needs to be sort of this equivalent, like here's the value that you're going to get, and it needs to meet you at whatever level you're coming in at.
Mm-hmm.
Even so, one of the things that we realized, we ran a really big survey and sort of like did this massive push to get lots and lots of feedback in November, 5 months ago now. And overwhelmingly the response was, this is awesome. Theoretically, what you've built is incredible. Practically, it's just a little bit too hard to use. I can't find stuff. There's a few dead ends that I hit. It feels like it's built for, an expert.
Mm.
And we decided in December, for the first half of 2025, we're going to add no new features at all. All we're going to do is just clean up, simplify, unify, increase the performance of the site, increase the reliability of the data. And the transformation in conversion rates and drop in support tickets, and it's a thousand little things that I think are the difference between where we're at right now with only $30 billion of assets on the platform to trillions of assets. I think it's a thousand little iterations. And on the consumer side, it's so much of it's psychology. In the first 2 minutes, people are going to decide, do I trust this, yes or no? We don't have that much time, and we don't have too many screens to convince people of the value prop, earn their trust. It's rare that you win people over again 6 months later.
Mm. I think when I think about tech companies, how many and I feel like we're all consumers of some sort of tech. So how many times would we rather had a company fix bugs rather than give us new things? And I think most companies don't do that because sometimes you feel like if you stop moving forward, you're dead, right? Like it's a tech idea that you have to keep going, you have to keep going. But it's so huge to tell your consumers, I'm listening, we're listening,
Mm.
and I think whether or not and you know that you've made improvements, whether or not you had, I think you won their hearts, right? And again, this is another psychology level because when it comes to money, no matter how technical you get, no matter how much sense the tech makes or how much sense the math makes, none of that matters because it's how I feel is how I'm going to determine how I spend my money. That's at the end of the day always how it is. And so I do want to go back a little bit because before when you said that, did you initially make this product for yourself? Was that the idea when you first started? It was just for you?
It was like before I was even thinking of this being a company.
Yeah.
It honestly, I had a list of 50 different company ideas, and I was just working my way through these different ideas. I would like sort of gave myself a week. I'm going to talk to as many experts in this field as possible, prototype something, dig into potential competitors. Is there really a problem here? And I was going through this list, and then sort of just once I got bored on the side, I was working on this like personal finance app for myself.
Wow.
It was at the start, it wasn't anything more than spreadsheets with some like integrated accounts. And then it got a little bit more complicated, with Python and Plaid and pulling in accounts and connecting to a bunch of different data feeds and some macro models and some off the shelf, portfolio optimization tools, and but I was still going through this list of like startup ideas because I really expected to do something in autonomous vehicles, robotics, drones, maybe somewhere hardware, software mixed, B2B, big partnerships, something with, AI. Uh, I, I really would not have expected that, 3 years later, I was deep into building, a consumer fintech app. And I think it's one of those classic stories where it just sort of got pulled out of our hands
Mm.
and friends wanted it. And I started personally relying on it more and more. And I honestly think I resisted for quite a while.
Mm-hmm.
We tried to sell it to wealth managers and institutional investors and sovereign wealth funds. And, at a certain point, we were talking to the Bank of Bangladesh about selling them, global forecasting models and thinking about how to set their inflation rates. And a lot of it came down to, why should we trust you?
Mm-hmm.
How can you prove that these models actually work? And still constantly more and more users on this consumer app, talking to wealth managers. They really like the idea of using this as a sales tool,
Yeah.
right? They get someone on a phone, they walk into the office, sit down, let me ask you 10 questions. We'll enter it into my little software here. Give me a statement of one of your accounts. We'll, take a picture, scan it, and we're going to automatically generate, using our sophisticated models, a full page assessment. And we're going to call out what's working, what's not working. Are you really on the path to retirement or not? What's your downside protection and diversification look like? Here's some opportunities around fees and tax optimization, benchmarks against other people in your age and risk preference. And then, presumably that really sells someone. Like, wow, they can do that in 20 minutes? What if I gave them actual control of
Everything.
my assets? But
Yeah.
then, so the follow up conversation was like, no, this is truly just a sales tool. As soon as we get them in the door, we're going to do what we've always done. One fund
Yeah.
across the entire organization. I cannot give individualized financial advice to 100 different clients, every drop in the market, I'm going to have 100 different conversations with every single client,
Yeah.
explaining why we made these decisions, trying to justify what the AI did. Instead, now with one fund, I can just send out one email to everybody and say, stay the course. And it's about minimizing contact with the client. It's about reducing the back office expenses, right? Every single contact with the client is a chance that they may churn and decide, you're not a good fit for them anymore. And that didn't sit right with me, right? I thought this feels like an obvious thing to improve financial advice across the board. It feels like this should lead to fee compression. This should lead to more personalization. Every financial advisor should be able to take on more clients. And I think at a certain point, I admitted that I was having way more fun talking to individuals across the country and empowering people to do it themselves. And, it's much harder challenge thinking about all the psychology. And it also feels like the market opportunity is so much larger. And it's wild that no one has cracked it yet. I think I'm obviously super biased. I'm in it,
As you should be.
but it feels wild to me that no one else is doing this. I don't know. I can't name, sort of a very close competitor that we're working against, and I don't really know why.
Well, I think the initial, so your conversations when it comes to B2C, B2B, when it like wealth managers, it's the way his response was a very archaic thought process, right? Like, we want to do it the way we've done it, because they're always looking for new ways to sell, but the way that each person does each company does their stock picks, that's their own proprietary algorithm, whatever it may be, and change is hard for companies at large. I think the companies that came before you was right before this wave of what AI can really do, and now they're kind of stuck in the sense that now the investment is so not so high. High is not the right word, but it's a time investment, and it might take away from where they're already at, right? Your timing is what ended up, and say similarly to what happened to you at Iris. You're just at the right place at the right time, kind of deal, right? Your skills and what's going on in the market and all that worked out at the right time. Similarly here, I think again, we all realize that picking stocks is harder than it actually is towards end of 2022. I think everyone started realizing, and then it's a whole deal of now everybody on Instagram or TikTok is trying to sell a strategy, is trying to sell an app, but it's not. And again, reading the depth of psychology you've gotten into in this app, it's not that. It's very much, trade like Nancy Pelosi. Like, it's very gimmicky in just copy this and you'll get rich. Or I'll tell you what, I'm a day trader. I'm trading these stocks today. And again, not taking away from those things, because they have their own merits in what they're doing. It's not the same as what the service you're providing. Your service is much more in depth, and I just it's really funny to me to think about how many times you had to go back and come back for this one person's psychological welfare. Because you said it earlier, no one wants to sell, and it's not, and like selling when it's down, you lost money, you don't want to sell. When it's up, what if it keeps going, right? Like, that's always
I'm not going to
thoughts we
stop the
have.
train now, right?
And another thing you said earlier that really resonated with me, you're like, wait one more day. I think that's killed so many of my potentially profitable ideas of either buying or selling. I'm like, ooh, it went down to, it went down to X. Maybe it'll go down more tomorrow. Okay, I'll do it tomorrow. And then it's up. It's up a significant percentage. So again, being dispassionate, having the AI have your back. Can you tell me, so like you mentioned, right? Iris was one type of business. Portfolio is completely different. It's a different customer based, complete everything else. What did you take from Iris into Portfolio? What was, because again, you've done a lot, and I love that you've been chasing what's interesting to you rather than being like, ooh, there's money here. It's very much interest and building on what you like and what you're going through. But these two companies are very different. But I can tell already that there's definitely things from Iris that you brought over to PortfolioPilot.
Yeah, it's. I think you're obviously. I want the money. Obviously I want, what's best for my kids. And, at a certain point, there will be private jets, all of that. But I think the money feels like oftentimes more means to an end. If I had a lot more money, I would probably just put more into the company, to PortfolioPilot. I would, do more investing in the things that I find interesting, other startups, find ways to up level, you know, probably, a few more services around the house just to give me more control over the things, let me do more of what I'm really excited about. Um, I think there's maybe two different directions to go in here, like one after the other. I think one is, what is the real difference here between the two companies? On the surface, they're very different, and I've been asked that question very often. The second thing is lessons learned about sort of startup one versus startup two. This question about why, how can you, what sort of expertise do you have running this now, especially from investors? All right, the real question. I mean, they don't ask it that directly, but
That's what they want to
what
know.
qualifies you to run this consumer fintech company in a space you know nothing about? When you have sort of this expertise from before, right? And if you think about one as B2B drones and the other one as consumer fintech, worlds apart. But you can also describe both companies as operating in highly regulated environments. It's you can't just have one big neural net black box because no one's going to trust you. The end users, the clients, the regulators, you and so at the end of the day, you need some sort of way to build. At Iris Automation, we pioneered this technology that we called complex bounding functions. And so it's basically this idea that around your AI or your machine learning models, you can basically set real world hard constraints. So you can minimize the space, so you can bound the space in which the AI, the ML system can operate, so that the output space, is bounded, is deterministic. And so there's still a fair amount of things it can do within this environment, within these constraints, but you're not going to get it to do crazy things. Mm-hmm. And there's real world physical constraints on the autonomous vehicle side, right? The sky is up, things like that, right? Build 3D maps of the environment. There's things you can verify. And if you layer that, we basically add, I don't know, 12 different layers to our model at Iris Automation. Each one sort of feeds into the next. Each one is individually interpretable. It allows us to use neural nets, in different layers, increase the accuracy of of the classification layer, or the tracking layer of just a few pixels, and being able to determine difference between clouds and birds and hot air balloons and gliders, makes a big difference. Distance. And so there's something about this mix of explainable AI, complex bounding functions, hybrid AI systems, very similar to what we've done here. I don't know if we'd be able to get the regulatory approval to operate as a regulated investment advisor if it was just one big neural net and ChatGPT wrapper. Mm-hmm. We have a massive auditing system that we've built. There's hard constraints around expected returns and volatility calculations, and there's a CAPM model that we've built and a dynamic factor model similar to what central banks use. We also have some cutting edge multivariate machine learning forecasting models, but we sort of integrate this on an ensemble model. We have checks and balances about how crazy are the forecasts that they could generate and come out of this. We wrap it in a certain amount of explainability, right? Every single piece of advice that gets generated through the platform goes through these checks to make sure that we improve the overall portfolio score, which is influenced by markets, current conditions, your current portfolio, your preferences. And so you can think about this as sort of this hybrid AI stack with explainable models where we're mixing cutting edge AI with more traditional models. It's a Silicon Valley venture capital business. There's a certain playbook around raising venture capital, things to prove out. If we're thinking about psychology, how do we make people feel safe? How do you brand in an appropriate way? One big lesson learned at Iris was that people didn't really care about our computer vision algorithms. They only cared about safety, regulatory approvals. If it was a radar system or an acoustic system, who cares what's below under the hood? We basically it created so much heat on board that we built this massive heat sink. No one asked what's inside the box. It was literally a black box, that we'd put on these, commercial drones and, let them get the regulatory approval, and they got a little bit of training. They wanted to know, is it going to do crazy stuff? We needed to show them one or two levels deeper, the data and, the outputs. I needed to hire very smart people, experts in the field, to be able to solve problems and do things that I personally wasn't able to do. We needed a marketing team and we needed an engineering team. And there's a bit of R&D and sort of like expertise in the field. There's operations, and we needed to go through. There was like a compliance team and thinking about regulatory approvals. I'm like, through all of this over the last couple of minutes, I'm describing both Iris Automation and the new company, right? It's all things that matter to PortfolioPilot. And so what's the difference? Okay, one, we're talking about computer vision models and drones flying around, and the other one we're talking about economic models of portfolio management, applied to end user portfolios. Semantic differences, right? It's it's really just the application that's different. Yeah, I mean, if you think about it like that, then suddenly, like, wow, these are basically the same company. You could think about my wife's company the same way, right? Very sim life, hybrid AI model. They've modeled the human body for drug development. They've raised $20 million. They have partnerships with the FDA and the Mayo Clinic and some of the biggest pharma companies in the world. No one is going to trust some big, black box model. There needs to be explainable levels. They can use mechanistic models. They model blood circulation in the human body. They model absorption rates, and they think about toxicity in the liver and in the brain and in the heart and in the kidneys, together with some incredible machine learning and modern AI models. And so in many ways, I think there's something very similar between those. So that's the first question. Second question is, what did I learn? I honestly think if I look back at the 7 years of portfolio at Iris Automation, we wasted so much time doing things that were not necessary. And I think a lot of it comes down to focus. This incredible insight that I just shared, that no one cared about our computer vision models and that they only really cared about the regulatory approvals and the safety case. I don't think I really internalized that until year 4 of the 7 years. And I think a lot of it was just trying to sell the system to customers. What does the one pager look like? What is, it was super important to us that we give people the tech docs and instructions for integration and capabilities documents, and every hardware product has some manual with all the things. And I think sort of on the surface, people told us they wanted a collision avoidance system. And it was clear they didn't care whether it was radar or computer vision. If it worked, great, right? And so it wasn't like we talked to we just avoided talking to customers and built it in our living room. for a number of years and then tried to sell it. But I don't think we really tried to sell it. We had a lot of customer conversations. We listened to what people told us. We wrote it down. But then when we came back to them with this, you know, truly cutting edge computer vision system on a chip, ready to buy, I said, well, this is part of the puzzle, right? I want the computer vision system, but I assumed that you knew that you needed, like, what it really does for my business is that it gets me the regulatory approval. Mm-hmm. And so if you don't come with the regulatory approval,
what's the point?
What's the point? I'll sign a contract saying that I'll pay for the system as soon as you get the regulatory approval, if you want, and if it, puts me in first in line, and I'll make a down payment, and it's really important to me. I need it, but fundamentally you're selling me the wrong thing. My guess is that if we did it differently, then in year one or year two, we could have figured that out. And I think we would have spent a lot more time with the FAA and Transport Canada and central, civil aviation authorities around the world, which was basically all of my life, years 4, 5, 6, and 7, right? Just flying around, doing lots and lots of demos and presentations and talking about our safety case. I think it's very similar to, sitting down with the Tesla guy and saying, here's a recommendation, and then waiting. Is he going to click the button and execute the trade or press ignore? Right? And it's the same thing, I think. Someone says they want something, and until they pull out their credit card and buy it, you probably don't really understand, what the pain point is or what it takes to sell them something, what they're really looking for. We collected a lot of feedback, right? And I think a pretty big mistake for me, even last year, was thinking, sure, it's complex and there's a lot going on here, but if it's a real pain point, then people will blast through that. And I think that was correct sort of up until a point. Mm-hmm. I think it's correct if I'm able to be in those conversations with people, right? The first 1,000 people, like I said, people pulled it out of my hand and really wanted it, and they're asking for features and sort of constant conversations back and forth. But now we're talking about, 99% of our users being people I've never spoken to before in my life. They need to feel confident on their own. And I think that most people, when they approach a product, they assume it's static, right? I think it's very rare for people. Mm-hmm. The way I think about it, as the founder, I think if someone has a problem, they report the problem, we fix it. 2 days from now, it's useful, in the way they want to use it. It's a dynamic, living thing, but I think most people approach the product very static way. Right? If I download Netflix on my phone and it doesn't work, I'm not gonna say like, okay, it's like 2 days away from working for me. Let me just support the ticket, and then I'll have Netflix working. Right? Yeah. I say, wow, what a piece of garbage! I can't believe Netflix doesn't work.
Yeah.
And I think that's like a huge reality. And so now 2025, it's a lot about scale and customer acquisition, which is why we've like really pivoted that focus on, make this a proper self-serve experience that, people can trust on their own. I think that's a huge thing. I think we wasted time on bookkeeping and projections and patents and copyright and branding, and probably lots and lots of conversations with investors that ended up not going anywhere, that we should have just counted on them. And, in reality, they were 10% in and we thought they were 80% in. Feels like a lot of sort of first time mistakes. There's lots of people trying to sell you stuff in the world. Right. And I think this time around, I said, look, the first 2 or 3 years of the business, until we get real product market fit, I don't really care about any of the other stuff. Mm-hmm. Friday 2 to 4 p.m. is my like admin time for the entire company. And if I don't get it done in those 2 hours, then I just push it to next week's admin time. Everything else in my life is focused on product market fit, making sure we're building the right thing, making sure we have a scalable way to find an audience and bring people into the app. And I think with Iris automation, probably the first like 3 to 4 years, probably 20 to 30% of my time was spent on random admin stuff. Mm-hmm. I also think that there's a clarity that the company needs. As soon as you start working with more than one other person and you're sitting next to each other, two co-founders, at a desk, in your living room, basement, whatever, I think you need to be really clear about what to work on and what not to work on. And I think it's common for people to have some goal, this is the thing we're building. I think it's very uncommon for the founders to very explicitly spell out, this is what we're not doing. This is what's not important to us. And with Iris Automation, I think I realized way too late, quite often, Kevin was working on a project for 2 months that we shouldn't have wasted any time on. Why was he doing that? Like, well, he's a super smart engineer. Like, he has a list of reasons why we should do that, and technically, it connects to the goal. You can trace it through to the goal and say, like, this is why I'm doing it because it ultimately leads to the thing you put up on the board. But I would have been fine with like the 2 hour hack, that solved 80% of the problem. I didn't need you to get to 99% on this problem, until Q2 of next year. It's fine if it would have been fine to leave it as sort of a small burning fire in the background because we still have the major blaze in front of us that like all of us need to be firefighting.
I think when it comes to any kind of like building, it's always great to like iterate and be like, this is the problem right here, and then we'll get to the rest. And the thing is, but it's, what I was going to say earlier to you was when you're saying like all the whenever you're building something cool, it's very easy to get excited about it. And when you're the builder and you're going to sell, you're excited about the thing you built, so you're talking about it. But the person in front is looking at one part of it, right? Like you said earlier about the regulatory piece. But that's the thing that I think it's always, it's not a bad thing that you're excited about what you built. You just got to highlight that extra piece, right? But I really think it's really cool that you were able to describe both companies with one line of speech, and they'd be like, oh yeah, but this is the difference here, this is the difference here. But basically, the idea was the same, and that shows like a great vision in terms of leadership. That's really cool. So I know that there's a lot, and we talked about the different going back and building on it, but can you go into a little bit about like step by step of what's under the hood without giving away your secrets? Because I know people would want to hear that, but
I'm
just
happy
a little
to be
bit.
like fairly transparent. I think ideas are a dime a dozen. I'm not really worried about someone stealing this and building it themselves. Everyone is 3 to 4 years away, and like we're optimizing on velocity, right? We're hyper focused. We're talking to customers every single day. I feel like I know exactly what we need to do for the next year or two, and we're just like heads down executing. I think it'd be very difficult for someone to compete with that. And it's not necessarily a good thing to be first, right? I don't know if it's a good thing or not, but sometimes selfishly, I think that it would be way easier to be this fast follower, have another company that's like coming up with all kinds of innovative stuff, and all we need to do is just copy them to, keep pace. But, you're talking about Iris Automation or PortfolioPilot?
No, portfolio.
Basically, okay, I think we can talk about sort of the user experience first, and then like dive a little bit under the hood about like how these things work and sort of unpack it. At the end of the day, we think about the whole system as this pyramid. or maybe an iceberg, where most users only see sort of like the very tip, that's above the water on purpose, right? That helps with simplicity. Ideally, the one recommendation we give is so good that you take it, it's exactly hits the spot, it's exactly the financial advice, the optimization I was looking for, and it increases my expected returns, it lowers my fees, it lowers my taxes, puts me back on track for retirement, it staves off, the fear and greed that I was worried about. That's if we do our jobs right, similar to Netflix, Amazon, whatever it is, right? Like ideally, I open the app and the show I want to watch is like the app should be very simple, right? Like if Netflix truly got it right, open up Netflix, the show is there, click it, start playing. That's it. It doesn't need to be more complicated than that. If I finished but there's so much you need to know to get it right? Which means that Netflix truly has to build this like discovery engine, and the interface is way messier than you really want it to be. Same with Amazon, right? It'd be much better if it would just said like, okay, I know that you're coming to the site because you want to buy shoes. Here's the shoes you always buy, every year. Click the button and let's go. And so people go to portfoliopilot.com. Surprisingly, the thing in advertising that seems to work crazy well, we've tried everything, right? We've run thousands of experiments at this point. Tax optimization for self-directed investors, and think about long-term retirement planning, and are you getting the right estate planning advice, and are you diversified, and get your portfolio score today in a free assessment. The thing that works, we have a great free portfolio tracker.
That's it.
That's for most people, like they come to PortfolioPilot because it's a good free portfolio tracker. They're currently using a spreadsheet and they want to, all the different accounts and tracking. They just want to put it in one place. And this feels to me like a small thing that we just needed to build. To assess someone's portfolio, to give them good financial advice, we obviously need to know your net worth, right? We need to pull in the different accounts and connect it all. It sort of felt like this necessary evil for us to build, and we just give it away for free. That's not where the real value is. But millions of people, need a portfolio tracker, and they want to see things in the same place. And maybe it's because Mint shut down, or maybe Personal Capital, got bought by Empower, and sort of like much harder to use now and not getting the updates. There's a whole bunch of paid portfolio trackers. And so is there really a good free portfolio tracking option? Honestly, maybe another one of those scenarios where we're sort of just right place, right time. We have a business model that works that allows us to just give away a free portfolio tracker that, works really well and can connect basically anything, from real estate to student loans. And so people come in, they register, they sign up for free, they answer a bunch of questions to help us personalize your assessment. We ask people to import one account. And even on this front, like some people don't trust us to give their bank information and brokerage login, understandably, right? And we use Plaid, and we use Yodlee and Snaptrade, trusted by tens of millions, but still, maybe, a conversation too. Let me see the value first before I, give this up. And so we allow people to take a screenshot of their brokerage account, or upload a statement or a CSV file, or even the spreadsheet that they've been working on. Or we allow people to enter it manually or copy and paste it in. And we want to make it super simple. However you want to give us the data, we'll take it in. And immediately once you come into the product, we give you this portfolio assessment, kind of similar to what I was talking about before with the wealth managers. We want to benchmark you. We want to tell you what's working, what's not working, where are the optimization opportunities, without giving you the real financial advice. All of this is free. There's a sandbox environment. You can, execute trades and move things around and rebalance, in this sandbox environment that allows you to just sort of mess around with draft portfolios. And then if you want to turn on the agents, if you want the proactive financial advice, the tax optimization, the fee saving, the investing advice, then you upgrade to a plan, $29 a month membership plan, on a month-to-month basis, $20 if you buy it annually. I think crazy cheap, right? We're probably not charging enough. Ideally it pays for itself, if you use it properly. And then we give you some financial advice, right? And it's like, it could be the next $1,000, like where to invest your next $1,000 comes in your inbox once a week. Every month at the start of the month, we tell you, here's the top 3 things that you should do to improve your financial life. If you only use it for those 2 use cases, we'd be very happy. Shut down the app 30 days of the month, and just, it would be great if you just had a ritual, see the email, take 10 minutes, make a few adjustments, close it again. We are not trying to get you to open the app every single day and trade constantly, right? Like I said, that's not the game. There's lots and lots of trading apps. It should be this sort of trusted companion that is proactively looking at stuff. Last week or the week before, there was a big market downturn, and our system automatically started sending out thousands of tax optimization suggestions for people to do tax loss harvesting on their accounts, because they now had unrealized losses that they could harvest. If you wait till the end of the year, it's possible the market's up again and that opportunity is gone. And so the idea that the system sort of recognizes this, one-time opportunity here, maybe takes the sting off of selling, a loser, and then, it recommends a replacement security to buy to avoid the wash sale rule, and, be able to keep the same kind of exposure. And so, it's as simple as that. There's lots of other tools. You can go into the underlying assumptions and everything like that, but this is really sort of going under the water level to figure out all the assumptions below the surface. Right here we get into sort of the tech stack that we've built out. And basically there's a recommender engine right at the very top that understands the user preferences and market conditions, what you've ignored and what you haven't ignored. Amazon, Netflix, right? There's like state-of-the-art recommender engines, and everyone's talking about LLMs, but recommender engines have become way, way better over the last couple of years as well. And then, what feeds the recommender engine? There are sort of hedge fund inspired portfolio management tools that we use. Things like Black-Scholes models for options analysis, and portfolio, an efficient frontier optimizer to think about building an efficient portfolio and, run through thousands of potential combinations, how to reweight your securities. We have a downside protection components and regression models to think about, is your portfolio going to be affected by a big surprise in inflation, right? If CPI next month, rises significantly compared to what people expect, it's likely it's going to affect major sectors. And, how affected are you? How macro neutral is your portfolio? Yes or no? Right. And this starts getting like super technical as we drill down sort of below the water level. Like I said, you can stay high level or you can drill down into the different components. How do we build the regression models? We have major indexes. We're tracking something like 20,000 different macro series, 70,000 securities in the US and Canada. And macro series are global, right? We're tracking geopolitical risk for all G20 countries. As you can imagine, Russia's geopolitical risk is all over the map these days. US as well is like rising quite a bit. It's building permits in South Korea. It's inflation in South Africa. It's thinking about GDP growth in Argentina. no one on our team is tracking all these different things, right? But it's all fed
Mhm.
into this model and sort of layers up into these different indexes that we've built. And then all of that sits on top of this forecasting model. We spoke a little bit about that before on this ensemble model that we built with basically a bunch of different forecasting models. Some old school CAP-M model, basically it's beta volatility models, that are commonly used on Wall Street. Some much more cutting edge multivariate machine learning models. And then sort of all of that sits on top of this ETL system, basically like a massive data infrastructure system where we pull data from, I honestly don't know at this point, somewhere between 10 to 20 different APIs and feeds and scrapers that we've built to pull in the macro series and news and individual security details and histories and many, many more information that ultimately feeds into this machine. And then all of this data, like you can find it in the system, right? You can drill down into the forecast, and there's an explore tool you can keep clicking down. There's the high level recommendation. Let me see some details. How did you calculate this? Drill down further into the details, land on the security page for the individual item. Let me look at the underlying indexes. Let me look at the data there for these indexes. There's anomalies in this data. How did you remove those? We want to be super transparent. And, to your comment before, it was like, maybe you don't want to share it all. Who's going to build this? If you build everything we've built, wow, I want to talk to you. Like we're going to be best friends. Like this is going to be so fascinating to, talk to other people who have built like this massive stack to be able to tell someone to buy or sell, one very small piece of their portfolio. I like to think it's like incredibly scalable. Like you mentioned before, it's very difficult for some big incumbent to do this. Right? It feels like you cannot half-ass this sort of implementation. You cannot just give a little bit more tools to your human financial advisors. They are either, sort of one fund giving the advice altogether, or it's hyper individualized. But you can't and so it feels like you need to commit, right? You need to spend the millions of dollars to truly build out this kind of system with all the psychology and everything like that. And then we're going to be another 4 years ahead.
Yeah, exactly.
We're at
Well,
this point.
the thing is, you've actually, so any kind of tool that has come out, obviously we already established that they're different because they're not as granular, but any other tool that's come out is either too technical or too general, right? If you go on some of these like Robinhood, whenever it's like anyone can trade and all that stuff, but we have to realize that there's four types of people that exist. There are people that don't invest. There are people that have 401ks. There are people that are like everyone in 2020 to 2022 that thought they were great and they were picking. And then there's people that are out there that are doing the real like analysis and sitting down and going in the weeds. And there was never, especially like, I mean, as of yesterday, I would have said there isn't a tool that can get to all these people, but this is it. It really can. And I think also I want to make it very clear because you talked about the cost. Brokerage fees are usually a percentage of your portfolio. Don't forget this. A part of the trades, whatever it may be, paying a monthly fee almost every time will be worth it if you have some sort of a portfolio. But I'm trying to be very I'm looking at time and making sure that we don't go over. So I'm going to start wrapping down, even though I have so many things to go over. Maybe we could do another episode in a few months because this is a wonderful conversation, so much good knowledge. I'm going to do what I call the FAQs, right? Frequently asked questions. It's questions that I like to ask rapid fire, just for fun. So you don't have to think too much about it. It'll be very, very normal. So, in your opinion, what is the most misunderstood money concept?
I think this idea of continuous tax loss harvesting. I think tax loss harvesting just feels super technical. Taxes, boring. Let me do that once at the end of the year. And in reality, the idea that every single month you can do tax loss harvesting ends up typically leading to a much higher return with relatively little risk. Especially if you take one fund and replace it with something fairly similar, You can't replace it with something that tracks exactly the same index, but sell some S&P 500 fund or replace it with a large cap, index fund with low fees, similar exposure. To me, at least, it feels like a no-brainer. But you do need a tool like PortfolioPilot to do something like that, right? Because you sort of constantly need to be looking at the original cost basis, not just of a security or portfolio, but the individual lots, the individual days that you bought it at, because it might actually be reasonable to sell, the Tesla position you bought at a high in 2022, but it's not worth it to sell the Tesla position you bought, in 2019.
Mm-hmm.
Right? I don't know exactly what
Yeah.
the Tesla stock price is today, but you constantly need to be doing these kinds of comparisons. And this idea of continuous tax loss harvesting, I personally don't think we've really nailed the marketing there. It almost feels like we need to rebrand it,
Mm-hmm.
or I don't know what it is. Like people's eyes glaze over when we talk about it, but like I think people are sleeping on this.
I think I was going to say what I wanted to say towards the end of the episode was that I wanted to do an episode on tax loss harvesting because I genuinely think people don't understand. When I say people, I mean like the average investor. Most people don't tax loss harvest. Even at the end of the year, they don't do it, right?
Right.
And it's something that most people don't understand about. So I would ask you to go in more depth, but I think we'll, Alex, if it's okay, maybe in a couple months, maybe in like 6 months, we'll do an episode and
Yeah,
we'll dig
sure.
into it.
Let's do it.
By then you'll have the rebranding for tax loss, because honestly you're absolutely right, because people don't get it and they need to. It's really powerful, but that's awesome. Most underrated AI trend in your opinion?
I think that's short answer, personalization. I think that most people, when they talk about AI, I think they are talking about super intelligence, and they are talking about agents doing stuff for you, on your behalf, booking trips and getting a reservation. And there's something about being able to do massive data research at scale. But I think for most people, it's the personalization element, the idea that you can bring expertise to your specific situation.
Mm-hmm.
And I don't know, I like to listen to all kinds of educational material. And, yesterday I was listening to this 3 hour long podcast. This podcast, right? I don't know how long we're going to go, but a couple hours, it feels like, we've been talking about lots of different topics. I think if 1,000 people listen to this podcast, 10,000 people listen to this podcast, there's value in that. But it would be way more valuable if you and me were individually having a conversation with each of those 1,000 people.
Mm.
And with AI, it feels you can do that. You can take the essence of everything we're talking about here and apply it to listener 256.
Mm-hmm. Mm-hmm.
Her specific problem, the business she's starting. The stuff we talked about, minute 22 to 27 wasn't relevant for her at all. She knows that already.
Yeah.
Skip that. There's a sort of a 20-minute version of everything we just said that's personalized to her specific use case. I think that is really the big game changer. There's a democratization of expertise that comes along with like this level of personalization.
Yeah. And I think, and we see levels of that kind of, I mean, fairly differently, but what, a lot of people started doing in ChatGPT, like, this is my situation, answer the question as if you're Bill Gates. So it's like, okay, I have a personal Bill Gates here just for my situation. So it's coming. It's going to probably take a little bit longer, but it's coming. If you weren't in tech, what would you be doing right now?
I mean, tech for me feels like, the cutting edge, whatever it is.
Yeah.
Right. So like I've shown, I think it doesn't really matter which field in tech, but it feels like, I don't know. I feel like I read stories about, some PE fund, going and buying a plumbing business and really scaling it up. And I think it'd be a lot of fun and crazy, but I don't think I'd really, get a lot out of it. There's something about solving like incredible problems and constant
Mm-hmm.
problem solving and high frequency trading and hedge funds and finance, but I think it wouldn't be that meaningful.
No, I think we
Maybe
got
like
it. You
there's
love
something
tech.
about science, or maybe get a PhD, like do something deep in microbiology or oncology. I mean, my wife, was in school for a long time and masters and PhD, and worked at UCSF and cancer research. And I mean, there's something incredible about like the depth that she has in a specific domain, that she can just there's clearly just like some part of her brain that's way closer to the true edge of the field
Hmm.
than like I will be able to get to. There's something interesting there. I think it's tech adjacent.
Okay, gotcha. No, but I do understand the initial thing you were saying, because I feel the same way about tech, where it's the cutting edge. Like anything else out there probably ends up coming back to tech anyway, right? All right, a couple more and we'll wrap up. What is? I'm trying to pick. Okay, there's a billboard. Billions of people get to see it. You can put a sentence, phrase, word. What are you putting on there?
Uh, a couple months ago, we had the Super Bowl, right? And like throughout that, I was sort of thinking like, okay, if we were going to have a Super Bowl ad for PortfolioPilot, what would it look like? And last, I don't think it was this year. I think it was last year. There was this like incredible ad with Larry David, and
Mm.
I honestly don't even. It was like maybe it was an insurance ad or something like that, and people would go to him and was like, "Oh, it's this easy to do this," and he was saying, "No, I don't think so." You remember this?
I think I do. I think I
And it
do.
was just like a bunch of different situations. Like, no, that doesn't sound quite right. I think it'd be something very similar to that, where like someone is getting financial advice from their advisor, and you have something like, I don't know about that. And then, Portfolio Pilot, get a second opinion, something like this, right? Like it feels so obvious in the medical space. If it's something serious, let me
Yeah.
ask a different doctor. Let me get a second opinion. It feels, there's no shame in that. I think if you have a financial advisor, the idea of, for one piece of advice that is giving you to go to some other financial advisor and ask,
Mm-hmm.
get a second opinion, is this right? It almost feels like there's a loyalty there
Yeah,
that,
yeah, you're cheating.
you're going outside sort of the established system. And so
Yeah.
the idea that you could use a tool like Portfolio Pilot to get a second opinion on your finances, even if you have a financial advisor,
Mm-hmm.
that feels like a message that, tens of millions of Americans should hear, even if it's simply just the free assessment, that's available to people, right? Just what's the downside? Get a second opinion, do a scan, just make sure that you're not paying. Some people do this assessment and we tell them, you are in the 97th percentile of, all users in terms of how much you're paying in fees.
Hmm.
Some people, I mean, anecdotally, people say, wow, I honestly didn't realize just how bad my situation was.
Yeah.
And it forced me to ask a bunch of questions about, wait a second, why am I in all these like really high fee mutual funds?
Mm-hmm.
Oh, your financial advisory firm has a relationship with the mutual fund provider. Maybe
Yeah.
let's talk about that a little bit more and unpack that. Uh, and so I think there's something about that second opinion that I think helps build confidence. And in general, this feels like an industry that needs sort of more of a spotlight. And let's bring more of this kind of stuff out into the open.
I love that. Get a second opinion. I think that's 100%. It's a really good side by side comparison, like with medicine, and you're absolutely right. All right. What is the best thing you've ever been gifted?
Ooh. Uh, Maybe it sounds super cheesy, but like we have two kids, and it very much feels like My wife went through a lot to, deliver two incredible boys. I honestly can't think of anything like better than that. I don't know if anything will ever top that.
That's awesome. That's wonderful. And then last one is, what is the book that you have gifted people the most, or your favorite book?
Uh, so this doesn't apply nearly as much to Portfolio Pilot, but there's a book called Spin Selling that I love. Like it completely changed my approach to sales, of B2B sales in particular. And like basically there's, it broke down four different types of selling. There's sort of, I forget, it's like SPIN is sort of the acronym, the four different kinds of selling. And I think it feels like a framework that's been extremely researched. It's super easy to apply. Like I've definitely gifted this book and told many people about this book. It's super old school. Doesn't really make it onto like any of the top lists for sales books to read, but it goes through, I think, sort of this iterative approach of like, if you do this very simple sale, sort of Carsman sale on the spot right now, buy this. There's a bunch of techniques that you can use that like work really well if you can make the decision on the spot, if the price point is low enough, if the stakes are relatively low. But then there's sort of like layers of complexity. If you're making this really complicated sale, like what we were doing with Iris Automation, where there's regulatory approvals involved and 5-6 figure deals, and there's a tech integration and software and hardware, and there's a regulation and a services component. Then the I it was something, I think maybe it's like intent based selling, something like this. And it was all about focusing on what the user actually gets from this.
Mm-hmm.
And once I got to that part of the book, I thought, okay, this is an extremely useful framework for me to think about. Like, I got to talk in all these sales conversations about the benefit to the user and frame everything in this benefit to the user. And I thought, like, this is cool. This is really useful framework. And then the next chapter talked about N, and it basically said, look, every good salesperson does this like intent-based selling. This basically frames the conversation about what's useful for the end user. But at the end of the day, like the biggest difference between good and great salespeople, it's all about needs-based selling. At the end of the day, it's not good enough for your clients that you're trying to sell to picture themselves, for them to understand the situation. They need to get so deep in the fantasy of buying the thing that you're selling that once they come back to reality, they actually feel like they now need to buy the thing to feel complete, to, to, and for us, it was, I think it was very easy to say, if you buy this thing, then you can fly beyond line of sight, and here's the like benefits to your business. But if we're really talking about needs-based selling, it was about helping the customer see 3 years into the future. What does their company look like if we unlock this massive bottleneck for them? They are now 10 times bigger. They were able to buy a fleet of drones. They were able to get this regulatory approval. They hired 10 more people. And like we just basically paint this deep fantasy and this dream. And then, once they are truly convinced, like, wow, this could actually in reality be my future, then sort of bring it back to like it all hinges on whether you buy this thing from me or not. And I think there's something almost about the bait and switch in this book about like, this is what's good. And then super impactful, like, this is what great looks like. That I think really helped me up level my sales game. The other book that comes to mind for me is a book called what's the name? Crucial Conversations.
Yeah.
And crucial conversations, I think, has completely changed the way I communicate with my partner, with my kids, with colleagues, investors. And the general premise is, most conversations we have like this are relatively low stakes. But as soon as it becomes personal for one of us, we enter into a crucial conversation. If we're talking about, some really important deal to you, or personal values, or family, or the future in the company, or the dynamics of our relationship, or having kids, or buying a house, or whatever it is. I mean, crucial conversations come up all the time, right? It starts becoming personal, and it's not as objective anymore about the situations. There's basically, the whole book is filled with like all these practical tips and scenarios. And like, even just one very useful thing that came out of this was thinking about emotional safety. Just, some meta process during the conversation should check in. Are we both feeling emotionally safe in this conversation? And you realize very quickly in many of these crucial conversations that, like, often you're so nervous to just get into the conversation that you don't take a step back and think, let's just make sure both of us are safe in this conversation itself before we get to any of the content. If it's a conversation, if it's a feedback conversation, with one of the people on the team, it could be as easy as saying, overall, you're doing a great job. I can't wait to work together over the next year. Immediately, there's sort of like the the fight or flight response of like, is this a conversation where I'm going to end up fired at the end of this conversation? Right? Most feedback conversations, with employees, like, in the back of your mind, unless you clear that up right away, there's like the
You're holding your breath.
psychological safety there. Establish that, make sure that the intent is right. And then I think, like, the other big insight from crucial conversations is this general idea that you should only talk about one thing. And like, you need to pick your topic of conversation very clearly. And I think oftentimes people should be talking about the pattern, when in reality they're talking about sort of one specific event. And it's, hey, wifey, you didn't, pack the dishwasher correctly. Yeah. And they say, well, I was, really rushed and I was doing XYZ. But in reality, like, the thing that's bothering me is that, over time, like, the plates are grading because, it's this pattern of behavior. Like, I should just be very clear, I want to talk about this pattern of behavior. It's not any one day, right? It's on any given day. Who cares about the plates? But this constant pattern of behavior, like, that's the thing that, like, I want to talk about. And if there's emotional safety, if you're very clear about the intent, just way less likely that things go off the rails. And it's easier, I think, to get to forward progress in some way, right? Like, ultimately, anyone you're having a crucial conversation with, like, ideally you want to build the relationship, and every crucial conversation should be building trust. I love that. Honestly, I'll probably read that every couple of years just as a reminder. My guess is, like, this is one of these books that I will get something out of every reread.
Yeah. No, and everyone should have a few of those books, because it's always great to retweak these things, especially when it comes to something like crucial conversations. All right. Well, so let's jump into the wrap up. Tell us what is next. What's next for you? What's next for PortfolioPilot? What's next?
We're still in this 6-month period where we're basically just improving stuff. And so if anyone signs up, conversation, like, that's actually a significant part of the time that I'm spending at the moment. The other big thing is focused on partnerships. We think a lot about how can we integrate ourselves into sort of like current consumer fintech apps? How do we partner with brokerages to be able to offer this to all self-direct investors, to be able to selfishly focus on scaled customer acquisition, through organic channels? I don't really like the idea of spending hundreds of millions on ads. But I think there's something about like really cracking repeatable customer acquisition to the point where, probably later this year, early next year, it feels like we're in a place where I can say, all we need to do is just pour gas on the fire. Mm-hmm. Right? Those two things are like really what 2025 is about.
Awesome. And where can people learn more about you and more about PortfolioPilot?
PortfolioPilot.com. One of the guys on the marketing team said that I should mention that we have a promo code, just podcast, for anyone. We give a month free of our gold subscription. Reach out to me on Twitter or X. My handle's Alex Harm, and or just directly reach out to support. There's probably a 30% chance that I'll answer the support ticket.
Awesome. And I'll make sure all of that's in the show notes. So as we wrap up, is there anything you want to leave our listeners with?
No, that's it. Thanks for listening. Awesome conversation. Right. I enjoyed it a lot.
Yeah, everybody, thanks for listening, and I guess get a second opinion.